But yeah, we're got a whole bunch of stuff to go over. We're going to go over the simple stuff first. I'm just going to try and kind of go through that pretty quick and fly through it so we can get into the juicy bits. So yeah, let's get right into it. So support resistance, it's a pretty simple concept that can actually make you a whole bunch of money. Basically, support is defined as a likely area where a downtrend is going to pause or reverse. So we're looking at our Facebook chart here. Let me get a drawing, my little line tool, very basic way of finding support. Get your little line tool, find a place where price bounces a couple of times. So here, you've got bounce there, bounce there, bounce there. That could be considered support. And then resistance is defined as a likely place where an uptrend will pause or reverse. So same story here, find a place where price hits a couple of times. So recently, same with the Facebook chart, would be here. You've got a bounce there, resistance, and a bounce here. Now, if you're a beginner, this is basically the very first thing almost that you learn when you start learning technical analysis is support and resistance. So, and you can actually trade based off of this alone. If you find a place, say like Facebook here, if you've marked this as a support level and your price is moving towards that, and then you get these bullish candles here, the bigger green candles, you can actually trade just based off of these zones or lines alone. You can buy on your bullish signals and then target a previous high or a resistance area that you've marked before, and that's a pretty good way to make some easy money. And support resistance is, like I said, it's a very basic way to do that. There are other likely things that do sometimes function as support. Moving averages are one, and the two main moving averages that generally focus would be your 200-day moving average. You can see prices held here several times on the bounce, but as you can also see, it's not 100%, fails sometimes. And I also like the 50-day EMA for support on the shorter term charts, like the 1 hour charts. It works really well on the 1 hour chart. You can see price bounces from here or holds the underside of it on the 1 hour chart a lot of the time. So your larger out time frames are going to be your most prominent support levels. So those are going to be the most important. So it's always important if you're trading on the smaller time frames to look at least 2 time frames ahead of you. So if I'm trading on the 5-minute chart with these levels, I also want to be, so I'll find my daily, my intraday support. So I would probably say this is a support intraday on the 5-minute, but I also want to look, I like to look at the 1 hour charts when I'm trading. So I'll find my 1 hour resistance. See, that intraday support there wouldn't look so good on the 1 hour chart. And I also like to find the dailies. The dailies and the 1 hour supports, you can see they don't necessarily line up. So another place support can be found a lot of the time is your trends. I'm not going to get into crazy with how to draw trend lines and stuff, but this is an uptrend. Connect your low points. Support gets found there sometimes. Now we can really, that's basically the basic stuff kind of out of the way, but you can trade based off of just those lines. Like I said, put your buy stops as things bounce from support, and then put your sell stops below that support and your targets at previous resistance. So with all that basic stuff out of the way, we're going to move over to an AMD chart here so we can kind of get into the juicy bits, which would be supply and demand zones. Lord, I've got drawings all over AMD charts. But supply and demand zones, they are a little different than support and resistance, and they're actually going to give you a lot more information. And I use this actual strategy that I'm going to show you with these supply and demand zones literally every single day. So basically, supply and demand zones, you'll find these areas like here. We see the price moves, huge spike up here, huge spike up here, huge price spike up here, another huge price spike up. This is an area that a lot of buyers see value right here. To draw these, you need a little box tool. This is an area people see value. So, oh, don't want that one to go in there. What ends up happening here is on this very first bounce, you'll get like a lot of hedge funds and institutional banks and stuff. They'll put in these orders and then price will move very, very quickly away from those areas. So a lot of unfilled orders are left in this area. So the next time that price goes there, again, those orders are filled, price spikes up again. And there's two kinds of candle patterns you're looking for in these zones for confirmations. And I've got a worksheet for you guys that I'm going to post in the chat that you're welcome to steal. Let me just go down here, copy it, and post it for you. I've actually got a bunch of worksheets. These things that you're looking for, they're called pin bars and bullish and bearish engulfing patterns. So I'm going to go ahead and post that up in the chart, and I'll actually package this up with the video also so you can all see that. Let me just find this chat room. There it is. So this is what a bullish and bearish pin bar looks like, and I'll show you on some of these charts also. So pin bars basically are, this is a pin bar, candles with long wicks and small bodies. And basically what this candle tells you is that there's very strong price rejection in this area to the upside. See, sellers, they pushed the price all the way down here, and then buyers said, we ain't doing that, and then they pushed the price all the way back up here. So that's a very bullish candle. Same thing with these engulfing patterns right here. If you can see, this would be considered an engulfing pattern right here. So you have this red candle comes in, and then price basically blasts way up above there. That green candle takes up all of the loss from the red candle and makes some gains. That's also a very bullish pattern. So you're looking for those two patterns. So there's a difference between a supply and a demand zone and a support and a resistance zone, but they're also kind of exactly the same thing. A supply and a demand zone is the first couple of touches where you've got a lot of unfilled orders. Then after each subsequent touch, generally the moves get smaller and less volatile and are more likely to fail. So this here has 1, 2, 3, 4 different touches, and actually it's currently bouncing off of the same zone within the last few days. But each time this touches, as all of those orders get filled, there's a lot of people who are invested in this area, and then it becomes a support and resistance zone. But you can still trade these the exact same way. So we're going to go through several charts here just so everybody can kind of get the picture on drawing that. I like to, when I draw these, I like to make them green for the supply demand or support and resistance zones, and then I like to make them red for the resistance zones. So, and sometimes these aren't going to line up as perfect as this, and oftentimes they don't. Like here, you've got a huge move down, which would be considered in this general area. That would be a demand zone. But then up here, as you can see, the wicks get a little more and they start going a little erratic. This would be considered a support zone, but I would even consider all of that part of that zone. So, if, like, once again though, if you're trading on the shorter time frames, you still want to mark these zones. And what I like to do is take a little text tool and I'll write in there daily support. So now if I run into that on my 5-minute chart, I know that is a very important level that I need to be looking at. Daily resistance. And I've also got some other worksheets and stuff that I'll send for you guys probably at the end here that'll show you these strategies and stuff that I'm talking about. So you can trade these by looking for those pin bars and those bullish rejection patterns off of these zones. So here, for instance, it comes down, it touches the zone, it moves up, and I would have targeted just outside of that resistance area because a lot of people try and sell before resistance, so probably here, and that trade would have won eventually, but it would have taken several days. And then as it comes up in here, so you don't necessarily want to trade this. And the reason being is because you're getting a lot of consolidation here and there's no very aggressive moves to the downside like there was here. But if you had entered a trade here and given yourself enough time to the short side, you would have eventually won there also. So, like I was saying, you're trading the daily charts, you're looking for those daily zones, and then you move into the 1 hour zones, of course. And then you can kind of refine this for the shorter term. So this here, huge moves down in this area. Looks like a pretty good solid resistance level for 1 hours. And you can color code these also. You can change, like this one's light pink, you can make this one a darker red if you wanted to. I don't necessarily do that, I just write in the thing, same as that, and put that up in the corner. Okay, now we're on our 1 hour, we're looking for a 1 hour support. So you've got a lot of gaps here. These charts are harder to deal with. So you've got a huge move up here, huge move up there. I would call this a support. You want to make sure you get all these wicks in. So, and then you can move down to whatever time frame you're trading from there and just trade based off of that. I necessarily don't take much stock in these smaller zones, but I guess if you were day trading on a very regular basis, you probably could. But I find normally that things don't move off of the intraday zones as often as they do the 1 hour, the daily, the 1 week charts. So if you're swing trading and you're trading based off of the daily, you should be looking for your zones on the weekly charts, which would coincide with the daily chart, and even the monthly chart if you wanted to go that far with it. So basically, the way you're going to trade off of these and put in your orders, yeah, you want to put your stops just outside of the zone. You want to make sure that your risk to reward ratios are good. So you want your risk to be 1/3 the size of your reward, or at least you want to make 2 times what you're going to lose on any trade at any given time. So here, if you were going to trade here, this is the only, at this point, this is the only indication that you have of any kind of previous high level. So you can't necessarily mark that. That mark would end up looking like this. Ooh, people are walking in and out of my house. But at this particular moment, let's just pretend like none of this stuff is here. And you see this engulfing pattern here. And you're trading this. And at this point, the only zone that you have is this here. If you're going to trade this, you need to make sure that you have a good risk to reward. So this is a fairly small supply zone, which is fine. So that means that you're going to be able to get a good risk to reward. I'm just going to draw a box for what that looks like. So your stop loss would end up looking something like this, and you wouldn't be able to get in here until after you got that engulfing pattern. So right at the top of that candle there. So your stop loss would end up looking like this. Let's just make that bright red so that we can see it. And then your reward for that trade would end up looking like this. So that's at least a 2-to-1 risk to reward. That looks good. I would take that trade. But say you're trading stuff like this here. This is technically considered support zone. This is technically considered resistance zone. you get your bearish or your bullish engulfing pattern here, but at the same time, you would have to get in right here. Your risk would be underneath of that zone, below this market structure, and your reward would be less than your risk. So that's not a good trade. In instances like this, is the other way I like to trade these zones. You've got all this consolidation here. You can trade the breakouts of these zones. So here, this is a good zone. There's a lot of consolidation here. Anyway, let's leave that just like that. So this is considered a breakout trade. What you have, let me get a trend line. You have price moving above this zone. And then you have, again, price pulls back to this zone and retests that same area of support, or that same area as support, and then price bounces from it. I would get in right at the top of this candle, and for trades like this, I would trail my stops instead of having a set target. Oh, I don't want to delete all the drawings, just that one. So in trades like this, I would trail my stop instead of having this target. So your stop loss is still just under this market structure. This is your risk. You could set a price target, but you wouldn't know any of this. So here's where you get your retest. This candle's not here. None of these candles are here. But in this case, as price moved up and made swing lows, here is a swing low. I would move my stop loss to this area. Let me just draw a standard little line there. So as price moved up and then retested, and this moved up again, I would move my stop loss to this swing low. Get this out of the way so we can see how this would have played out. Price moves up again, makes another swing low. Move my stop here. Price continues to move up and then makes a swing low there. You would have gotten stopped out the next day, and you would have made probably quadruple your risk on that trade. Now, if you're trading options with these, it's very, very important to give yourself plenty of time, because if you notice, a lot of these moves take a lot longer than a week. Weekly options are bad. The first couple of tests on a zone, so especially if you're trading on the daily charts, you need to give yourself a lot of time. Oh, whose microphone is that? But as much time as humanly possible. But this stuff doesn't always work, but as long as you have good risk to reward ratios on your trades, you can essentially lose 2 trades to every one you win and still come out ahead. Okay, so some people, let's get some stock tickers. Let's go look at some more charts that you guys want to look at. Post them up in the chat. PIN. Okay, Poppy wants to look at PIN. Oh, look, see, I was looking at PIN today. This is the trade that I called good, so it does work. We'll look at Riot, we'll look at DKNG, we'll look at PIN, we'll look at all of them. So let's just say, for instance, I'm trading options, and as we're talking about, of course, this is a solid uptrend on PIN that basically the exact same the whole time. PIN's finding support off of this trend repeatedly. But we're not necessarily talking about trends today. That's another topic entirely. But you don't really have very clear support resistance zones for stocks like this. And the reason being is because they move straight up. That's a good zone. These aren't necessarily good zones on the daily chart at all. Past that, here's a good one. And as you can see, the one-time price hit that. That's a huge, huge rejection candle. But remember, you got to keep drawing these on the daily charts first. This is a good zone. And if you were making trades here, that's a big bearish move down. So people at this point, yeah, we'll look at all of them. We've got plenty of time, and I've got plenty of time to deal with those. So let's just scroll through this way. At this point in time, this would be considered a zone here on the daily chart. We're just going to scroll through these slowly and see how these trades would have played out if we're taking them according to the rules that we're setting. So at the time, ooh, what are you so big for? I would consider this whole area here a resistance zone. Price pulls up, retests, breaks out, and then it sells off again here, but then it's bought up again here. So these are good bounces here. Then you get the same breakout from the zone here. I would consider this a good zone. Large price moves. And that breakout didn't actually hold. See, the breakout trades, they also don't hold all the time. But if we move down to the 1 hour area, see, this is that breakout, and it did not hold, probably because of the Jerome Powell speech and all that. I would be paying a lot of attention when this approached this area again, because there was a huge sell-off there. So if I'm looking for buys, what I want this price to do is come up into this area and not stay there. I don't want it to do, let me get a different tool, polygon tool. I don't want it to do this and sit sideways and chill out and then go back in and then sit sideways and chill out and go back in. That's no good. That's, people are not deciding whether this stock is valuable enough to pay more for or go down for. It's not good. I want a very clear signal. I want price to move up into that area, and then almost immediately I want it to show me signs of rejections. Like this. Price moves into this area one day, and then the very next day it blasts off, takes all of those losses out, and then some. That's a good trade. I'd buy there. See here, this is a 1 hour chart. I would have taken this trade, but you don't have any areas above it, so your trailing stops. So you would have gotten stopped out. If you're trading options, probably around break even is where you would have been stopped out here. Because this is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 hours later. So the theta probably would have eaten up the gains that you made from this spot. But you didn't lose any money. If you're trading shares, you would have made $2 per share. Not terrible. Not good. Not terrible. But with charts that look like this, right? This is crazy. It's very, very, very hard to pinpoint short-term areas on charts that are really gappy like this and all over the place because people don't know the true value of it. It doesn't necessarily matter what you think the value is, so it's always important to trade what other people think the value is. And I'm going to show you guys a couple of indicators too that can make this higher win rate. First one is the stochastic, and it will function basically the same way as the RSI in this sense. So I'm going to go ahead and throw the RSI up there also, just to show you guys how you would go about using this. So let's say we're trading these zones, and now we have our stochastic and the RSI. So let's say we want the RSI to be under a certain number. Let's just say, oh, I'm sorry, I should explain these for people who do not understand even at all. Basically, stochastic, you see this blue box, outside of it, 80 and above is considered overbought. And 20 and below for a stochastic is considered oversold. RSI, 30 and below is considered oversold. 70 above is considered overbought. So we can use these two indicators to add to this strategy. If you'll notice, as this price moves down, this is the first huge spike you get here. But the second time it touches, this is when you can actually end up trading this. Stochastic showing overbought, RSI showing overbought. You probably would have lost this trade unless you trailed your stops on it, because realistically, your targets probably would have been down here in the $3-ish area. Unless, of course, well, that's actually a $20 move down. I probably would have taken that. Would you guys have taken that? So here, this breakout and retest, RSI is still showing oversold, so I probably would not have taken that. All of these rejections in this area, I probably wouldn't have taken any of those. I may have taken this one down, that one would have lost. I would have taken this one with the RSI pretty well neutral. That would have been a huge win because you get two breakouts on one trade almost. Yeah, that's crazy. And then you get up here, sorry, excuse me. You get up here into these areas and you start seeing a bunch of rejections around the 125, 127 area. So basically, if you add this to this strategy, you'll take a lot less trades probably, but the trades that you do take will be more consistent trades. So let's go look at Riot. Everybody knows Riot has done, oh crap, I was looking at Riot. Here's another one of those crazy stock charts moving with Bitcoin. Okay, so we're on our daily chart. We're looking for what's the difference in stochastics. I just use a standard stochastic. It should be, hold on, I'm going to show you. Standard stochastic, K period 14, D period 3, smooth K is 3. I use a standard RSI 14 also. And I'm just going to go quick and say the reason for that is these indicators, if you go changing up all the settings and all the numbers from the defaults, that's not what everybody else sees. You want to see what literally 90% of everybody else is seeing. So if 90% of people are using the RSI 14, you're going to want to use that also, because that's a very likely place that when this RSI says overbought and 500,000 other people see that this RSI says overbought, they're probably going to sell because they're starting to get scared. So back into this. We're on our daily chart. That's where we're going to start. We're looking for zones. I would consider this not necessarily a supply zone, but I would consider that a support zone. But, and then here's a huge move down. So this is basically, I'm sorry, not a demand zone, but a support zone. I would consider this a supply zone. Last time this hit here, price tanked. It hit it again, price tanked. That's a huge rejection. It touched it again, that's another huge rejection. So I assume that next time this price moves up here, which may happen very soon. With Riot moving with Bitcoin though, it's a little different because looking at stuff like this, you're going to also want to look at Bitcoin. If Bitcoin is mooning, Riot is probably going to be mooning. If Bitcoin is tanking, Riot is probably going to be tanking. So you're going to want to, it's kind of like looking at Apple and SPY. They basically move the same way. So you want to pay attention to both of those things simultaneously. But you wouldn't have been able to catch this trade. And if you were long, you would have gotten stopped out on your, probably on your swing low hour charts. So now we've got our daily stuff marked. We can mark our 1 hour stuff. Scroll out here. Let's go out a ways. I would consider this a good zone. If I can get that marked correctly. Make sure you get the wicks in. You definitely want the wicks are part of price action, so you should be using those as part of your price action. So with these zones, always remember ceilings become floors, floors become ceilings. Same way with support and resistance. Areas of values change over time. So this originally starts as a support or as a resistance level. As prices come up, it starts bouncing off of there and using that as a support. You see prices are weakening, but that, like I said, is probably because of the Jerome Powell stuff going on. Everybody's freaking out. So now we're on our 1 hour chart. I would consider this area a resistance level in our 1 hour. And we're going to mark these so we don't get them all confused. So I don't know necessarily if this price did come up in here again, I would expect temporarily for it to pull back. And the reason being is these indicators are telling me that, right? And if I'm trading this way and I've set these rules for myself, I would have to take this trade if this price comes up into this zone and it starts rejecting. You might be wrong, but you're going to be right more often than you are wrong. So with these rejections coming out of here, I would place buys probably there. Stops would be this-ish area. But you have 3 different rules to tell you whether a trade is going to actually be one you're going to take again right now. You've got your zones. You've got rejection candles that you're looking for, those pin bars, those bullish engulfing candles. You're looking for that, and you're checking your RSI or your stochastic, whichever one you choose to use. And it's important that you take these trades when they come to you and follow the rules. You can't just follow the rules some of the time. If you set rules for yourself, you need to follow them all of the time. Let's clear this stuff up here and go look at another chart. DKNG. I like that one. I think we looked at that one in the last class too. Okay, so I'm actually going to post a couple of more of these things that I've got here just really quick into the chat so you guys can check those out also on these 2 strategies we just went over. Okay. Just give me 1 second here. I've got to scroll all the way down and some of you've already got these. If so, just disregard. Some of you don't. I have a lot more also that I'm going to post as we, and here's the use of the stochastic. Oh, wrong channel. You guys can save these, take them home with you. One more. Actually, 2 more. I'm going to show you just. I really need a mod in here, like Shankpo or Auto, to be doing this for me. My mods are terrible, aren't they? One more about the stop losses. Here it is. And I'll post everything else when we're done. But these are actually going to help out with what we're talking about right now and how you're going to trade these. So yeah, save those, keep them for yourself. DraftKings. I think we did this one last time too, so let's clear it up. Ooh, DraftKings, very nice. So start out on your daily chart, yeah? Price hits this area, bounces super high. That's a good zone. I don't expect price will ever hit that area again, but if it does, we can expect that it's going to move up very rapidly from there. Price hits this area, sells off very heavily. Ooh, no, I don't want to buy it. Several times. And then I imagine what happens. This is actually a good example of our breakouts. Come on, get out of there. Whatever, we'll just leave it. I imagine when we move down to our 1 hour, that's going to look like a really, really pretty retest. Let's scroll out and see. Actually, it kind of does. This was a trade you could have taken today. So you've got your zone. This is drawn on the daily chart. So we know that this is a very, very prominent zone. A lot of people are seeing action here. Oh, damn it, I just moved it. Sorry. Let's put it back. I don't know why it just got huge, but okay. There we go. One hour chart. So now we're looking for other stuff that's important. I don't know that I would do anything in these areas here. This could be considered a supply zone. But taking any trades off of there with this resistance level right below you that's been respected for a long time would not give you a good risk to reward ratio. So I wouldn't worry with any of this down here. You gotta remember, you always check your risk to reward. So let's just do it just for gig's sake. So let's say that you've noticed price bounce here twice. Cool. So you're watching it, and then you come out here to this third day. I really wish I could get rid of that. And you're like, holy crap, that's a huge candle. Price crosses this area, which is where you would need it to cross. So your risk, put it just below this market structure. That's your risk. Your reward, it's probably about 1-1. And that's if you target all the way to the top, which I don't like to do. Still probably about 1-1. You would have won, but that's a 1-1 risk to reward ratio. We don't like 1-1 risk to reward ratios. We like 2-1, 3-1, 4-1, 5-1, 10-1. So I wouldn't have taken any of these trades down here with this, the way right there. But this is a trade you can take. So you get the breakout here from your daily zone, retest on the 1 hour, and then you get a bullish candle here. That's a good breakout. So risk here. Remember, we're trailing our stops on swing lows. So you would have gotten stopped out probably. Would you have? I would consider this a swing low. So stops would move to here. Oh, you wouldn't have gotten stopped at. And then I would probably have moved up again on the low of this day. You would have gotten stopped out for 66 to 70, about $4 a share, or $4 later. But 1, 2, 3. So for options, I just want to take a minute and talk about this. If you are trading options, I do recommend short-term options, weekly-ish. I recommend taking these trades off of the 1 hour chart, which is what I do when I'm trading options. Because that being said, oh, you took the DKNG trade? Oh, no, hold on. You took a recent DKNG trade. That's good, dude. It worked out, especially if you took it down here. That would have ended up being a stellar trade. Yeah, no problem. But at the time, see, you get this. You don't know that this is going to break out because according to our rules, DKNG comes up here. You wouldn't have actually gotten a short signal here because you don't get huge rejection candles. But you've got 1, 2 indicators if you want to be a little generous with the RSI here, which I probably would have. But you don't get those huge rejections. It doesn't cross back out. So you wouldn't take a short there. So you wouldn't lose, but you also wouldn't take a long trade here because your risk to reward is small. Does that make sense? I hope so, because but here, this is a good trade. Yeah, it's so important to manage your risk. And if you're taking trades and you're smothering your own trades and your losses are staying the same, you're not going to make any money. If you take this trade right here, let's say you take this trade. That's a stellar trade. And you get a little crazy with it and you used to move your stops up every tick. Uh-oh. And then you get stopped out the same day. Let's say this shot this huge price spike. That's a big price spike. It went from 63 to 68. That's a big price spike. If you'd move your stop there, you'd have been stopped out the same hour. That's no bueno. We don't like that. But if you trail your stops, you could have caught more. Don't smother your trades. Give them room to play out. But let them play out. If you have price targets, take those price targets. Here, you have a price target. If you're not trailing your stops, you have a price target. You have previous structure highs. You have them here, right there, previous structure highs. Look how much money you would have made on this trade targeting previous structure highs. Here's your reward. And of course, we all know where our risk is. This one trade makes up for probably 3 losses, just like this. 2.5 losses. This one trade would make up for 2.5 losses. In 1, 2, 3 days' time, you make up for 2.5 losses on one trade. That's stellar. That's why it's important to let these play out and don't smother your trades. Don't freak out every time price moves against you $1 or moves your way another $1. You have to trade mechanically and respect the rules that you set for yourself. Go back, paper trade with it some, figure this stuff out, and test your entries. Okay, let's go look at Open and Boeing. Opendoor. Once again, start on the daily. This is a very new stock, so price is going to be very volatile. Ooh, man, somebody could have caught that one. So, price moves up here twice. Good zone. I bet that coincides with that drop. Ooh, so close. Let's just mark these out real quick. Let's put on this one. Daily support. Let's leave it there. And then we're looking for daily chart resistance. I would mark this area. And this one huge errant candle, I would mark that with just this, just a line. And I would make that line as bright red as I could get it because that's all-time highs. I think it's a fluke, personally. Make that one red. You don't have more than the one retest. So this could be considered a supply zone. This is what I'm talking about. There's probably a lot of bag holders here. There's probably a lot of people who thought this thing was going to shoot the moon, and now they're just hanging on to that stuff. So it's probably an area of interest for all of these people who bought here. You could mark it like this. I would. You could either I would mark it personally with just this one single red line, but you can mark it that way also. I'm not going to go through the label all of this stuff. It'll take too much time. So now we're going to move down to our 1 hour chart. Uh-oh, there's a bunch of good trades you can make on this one. And we're looking for other areas of importance. Remember, you're looking for big price moves. Here's one. I don't know if that's going to touch again. Here's some areas of consolidation. I would mark this as 1 hour. The more recent this stuff is, the more likely it is that it's going to hold water on the hourly chart. So you're looking for those moves. See here, huge sell-off. Definitely mark that. That's a very significant people. When this stock hit this price before, everybody was like, holy crap, it's way, way, way too expensive. I need to get the hell out of there. So it's also equally significant when it breaks that area because buyers are seeing more value in it than sellers are seeing not make where the value isn't, if that makes sense. It's very significant because you get a huge a break there. This break is huge. Then you get a retest. It holds this area as support. I would consider that a very significant area currently. And these areas hold. Huge sell-off there. Huge sell-off there. Huge sell-off there. Several times. And that's a fairly large candle. I would mark that intraday on the 5 minute if I were marking these on the 5 minute. I would mark that there. And I would probably scroll it out to one more day. Now remember, these intradays do not hold as much water as you're at 1 hours, your dailies, your weeklies, your monthlies. I don't know if you saw this, but I actually do this on my charts also. But if for some reason price came there and started rejecting, I might see that as a good scalp trade and pick it up. So if pre-market tomorrow, this thing was down here, zigzagging, doing its thing, and then market open, it started showing bullish momentum, I would probably take a day trade here, target market highs from yesterday. Of course, that's going to look like nothing on your hour chart, but that's a good day trade. That's a really good day trade to take. You're not going to catch these catches like that very often. but let me change the colors here. That's a good day trade, good risk to rewards. I would take that. But I mean, you don't, like I said, you don't have to day trade. You don't have to look at the 5-minute chart. You don't have to look at anything but the daily chart, honestly. But you're not going to get as good of entries if you're only doing this on the daily chart. See, that looks like next to nothing. It's one candle on the daily chart. Still looks pretty good on the hour chart. I would take that. All right, so let's scroll through a couple of these trades, see if they play out. Here's a very significant break. Of course, we know that one when it played out. But you're looking for areas of significant movement. That's a huge spike down. There's probably a lot of people either bag holding in this area or they see that the stock is too expensive here. Because I don't know, a lot of you probably know this, but the market is controlled by two things: fear and greed. And there are certain areas when people get greedy, they see overvalue, they see discounts, so they buy discounts. And then there are certain areas when people see too much money to pass up, right? Stock's too expensive, so they freak out. They don't want to lose all the money they made. They sell.
It's like that sellout happens without any reason or any news coming out. That's where people will try to buy in more, right?
Yeah. Oh, let's keep. Hold on. Let me finish before we start asking questions and stuff. Yeah.
Sorry, yeah.
But got a couple more charts we're gonna go over. Boeing. Junior says Boeing, and then we're almost to the question part. I promise. Oh, see, this is me trading Boeing currently. I'm actually in this Boeing trade as we speak. And let me explain it to you. This is perfect. Good call, Junior. I watched Boeing shoot the moon here. Yes? And then I watched Boeing come all the way back down to this area. I got in this trade right here. It's a spread trade. My target was 290. I didn't expect that I was going to get that. That's a very bullish move off of this resistance. I marked this because price shot down. I assumed it was from JPOW. And I actually averaged down when price come back to this zone that I drew and respected it. So I doubled down right here. If it would have crossed below here, I would have stopped out. But it didn't. Price respected that zone that I drew. And it's now currently in the middle of what I think is going to be a breakout of this area here, probably tomorrow. So this is the daily, or the 1 hour zone. I drew these intraday here. This is where I come to get my perfect options entries. The 5-minute chart. If I've got all of my zones and everything drawn out and I'm looking for, super best value on options, the very best place that you're going to get a value is bullish moves here. A lot of the times you'll end up getting in too early doing that. Oh, I moved to the 1 hour. No. It's the daily and the 1 hour, I suppose. Yeah. Yeah, see, that's a very significant level on the daily chart and the 1 hour chart. And if you scroll this over, you'll notice straight over this huge sell-off's part of it. If you'll scroll it even farther over, oh god, you notice that huge gap sell-off is part of it. Here's a gap down. Here's a huge sell-off. So these areas sometimes can last a really, really, really long time. So this breakout is huge. That's a very significant break. And it may not work out. I hope it does. because technically I'm not following my own rules here because the stochastic is oversold. But I have targets. When I bought in, the stochastic was not oversold. But that's a good trade. Let's look at a couple more charts. One more chart, Poppy, and then we got to get to the questions and answers part, yeah? And let me just scroll through my notes and see if I didn't forget anything that I have wanted to talk about here. So we talked about I think we pretty well covered it. Gonna go over one more chart. This stuff is not difficult. You can make it difficult. Like if you, I'm actually going to show you a bad way to draw zones real quick, just for posterity's sake. Oh, Poppy, this is terrible. This is, why do you always like these IPOs, man? Okay, so let's say if you get too many of these, you're going to confuse the shit out of yourself. I'm just drawing these to show you how confusing this is going to be. Just for posterity's sake. What I might talk? Sure, I'll talk about wedges just for a minute. Obviously, if you start drawing these for every swing high and go back, and every swing low on the daily chart and on the hour chart, you're never going to take a trade. Focus on significant areas of price action. Do you see? That looks insane. Do you think you could trade off that? I know I couldn't. How do I get all of these off? Focus on significant areas of price action. There are two here. One, huge breakout. Retest. Moon mission. Huge sell-off. Very significant. Another huge sell-off here, so I would probably mark that. And I imagine if we went down to the 1 hour chart, I would mark this huge sell-off here also. I would probably mark that on the 1 hour chart. Yeah, see. Price consolidate, sell off, sell off. I would mark this, but I would make sure to label it that I got it from the 1 hour chart and color code it. So if I were trading this, this probably would not end up being a very good risk to reward. So I wouldn't buy anything high side from here. I would take a breakout off of this. Yeah, I would take a breakout off this. I'm just going to eyeball risk to reward here real quick. So let's just assume structure lows. I would probably try and trade a breakout there for sure. All right, wedges. Somebody asked if I talk about wedges real quick. Sure. Just 1 second. So let me find something that's got a wedge pattern on it. Let's look for something on the hour chart. Actually, let's just go to Bitcoin real quick. I like Bitcoin. This stuff works on Bitcoin too, by the way. I've been trading these two zones for weeks now. Yeah, I've been trading these two zones for weeks. And today, this trade right here I caught. And based off of these huge candles, I actually just let it run. And I ended up getting a breakout. I ended up getting a retest. What I did though is I did move my stops up when it come out. All right, so I'm gonna find a wedge. Let's go to probably find a better one on the 1 minute chart, on the hour chart. Uh-oh, I just messed up my zones for you. Somebody help me find a wedge. Stock charts, Bitcoin, anything. Somebody help me find a wedge pattern. Jeez. Here we go. No, that's not a wedge. That's a descending triangle. BA wedge on the 30-minute. Owing 30-minute. Absolutely. I'm about to delete all of my drawings just for you. Sure, that can be considered a wedge. Probably ish. Prices are making lower highs and higher lows at the same time. So basically it's like an uptrend meets a downtrend at the same time. Anyway, we're just going to assume that there's a bunch of candles here, yeah? This is not necessarily something I would call a specific wedge. There are two ways you can trade a wedge pattern. Actually, there's really only one way you can trade a wedge pattern. When you realize that it's forming, prices can go, usually these things act like springs, yeah? So like a spring, consider springs, they wind up, they wind up, they wind up, they wind up, they get tighter, 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 you get a tighter. Eventually, what happens is the spring will explode either this direction or it'll explode this direction, yeah? The wedges, they work the same way, 99.9% of the time on a stock chart. Price is getting in here, it's moving, it's chilling, it's starting to get tighter, 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 tighter. So price can go two ways from here. Either this direction or this direction. So basically you're looking for springs. And me personally, if I trade a wedge, what I'm looking for is the wedge breakout. So you get the wedge breakout. I want to retest and trade this. So I'm not going to buy anything until I get that retest of at least the area it broke out as support. So right here, I want a retest of this general area as support. We weren't even supposed to talk about this. You guys just got, so anywhere here. That's what I'm looking for when I trade a wedge. Now, a lot of times it's just going to pop straight out and you'll miss a trade. It's going to shoot straight the moon and you're going to miss it and you're going to be sad. But I would rather not take a trade than take a trade and be wrong 10 seconds later. Okay, questions. I got a whole bunch of other charts for you guys that I'm going to post in chat. Oh man, you guys are being quiet now. Type your questions in chat. Open your mics. Keep it simple. Oh, somebody's typing. What we got? This is indeed Webull. I use TD Ameritrade, but would you say one of the charting platforms are better than the others? Oh, absolutely not. I would say that they're all better than Robinhood for sure. Robinhood charts are horrendous. As long as you get candles and the indicators that you like, you're good. That's all you need. This is indeed Webull. And no, you can't use Poppy's link. Somebody else is typing. Come on, you guys. I know somebody's got some questions. I'm going to start posting these other papers I got for you guys while we are waiting. Actually, you know what? I'm going to open my channel so you can just snag whatever you want out of there. And I don't have to copy and paste everything in. Permissions. I'm going to open this channel to student role. View channel. Please don't type a whole bunch of stuff in my channel and post links. That's where I post my notes. But if you'll see it down there at the bottom. You can steal whatever you want out of it. I'll package it up also when I do the video and get everything. Can you see my channel below? It says Notes and Analysis, folks. Go steal whatever you want out of there. Absolutely. Yeah, I appreciate you showing up, Royalty. Come on, I know somebody's got some questions. I know a couple of you have been here twice. Anything, actually, you know what? From some of the people who were here before, have you been using this stuff any? How's it working out for you? I know Deluxe Beats was having some success with it. Oh yeah, volume spikes for sure. Let's go back to something we already drew some zones on. A lot of times you'll get confirmation it's not going to work on cryptos or Bitcoin. Go ahead and tell you that. Did I mess up my zones? I think I did. Okay, so here's one we drew. Huge sell-off. A lot of times you'll get confirmations on volume spikes. And you can also, there's another indicator, and I'll just tell you guys about it really quick. I'm going to get these indicators off of here, except for the RSI. Or this, let's leave the stochastic. It's called the on-balance volume. And generally, huge volume spikes, you'll see huge spikes here also. If you notice right here at the end of the day, there's a huge buy volume coming in. So I'm trying to find breakouts. So here's a breakout. Historically, look at it on that daily chart. We'll probably get a better indicator. This is like twice the historical volume. A lot of times you will get huge volume spikes. So if you see this, the OBV here spikes down a whole bunch. I'm not going to go into crazy and what this is and what it at. Just know that if it goes up, it's good. If it's going down, price is probably following it down. But generally in these huge areas of sell-offs or buy-ups, you'll see huge spikes in volume, and a lot of times you'll start seeing those huge spikes in volume prior to those huge moves. So it's so hard to tell on Webull. Let me see if I can find a volume indicator actually. There's one. Let's use the volume indicator and get all this other stuff off of here. You notice this first gap out? That's a huge volume spike. It happens on 9. That's a breakout. Technically. What day is that? 9/15/2020. Let's go down to the 1 hour chart and look at it. 9/15/2020. Oh geez, I'm gonna have to scroll back so far. Okay, so a lot of times if you see huge volume spikes on stuff, you should definitely take notice of it. Higher than normal volume levels generally precede large price moves, and it's really difficult to tell the direction until after the moves already happen. If you just add it to your watch lists or whatever, see like here, this is a huge spike in volume. That's like 5 times the normal volume level. at least 3 times. And of course, you get a huge sell-off. I imagine that was probably accompanied by some kind of news or something. And price didn't actually move as that much according to this volume. So I would consider probably this area a good support zone just based off of the volume and out alone, honestly. Because you see, that's a huge amount of selling pressure there. And prices basically went right back to break even on a quarter of the volume 5 minutes later. I would actually consider that a good support. Here's another huge volume spike. See, volume can be very misleading. That's a huge volume spike there. Price does absolutely nothing. There's another huge volume spike. You do get a breakout shortly after this. See, price does nothing here, but then shortly after, price moons. A lot of times, huge volume spikes will come before huge moves. Sometimes they don't. Sometimes huge volume spikes do absolutely nothing. Here's a huge volume spike. Price doesn't move very much. Shortly after, price still doesn't move very much. This is probably significant. Huge volume all day long. That's a big sell-off and a big buy-in. And then a couple days after that, you do get a breakout. Just for info, is this host only on mobile, not on computer? Yeah, that's what I'm saying. None of these indicators, none of the indicators are going to be 100% right 100% of the time. That's why it's important to use your brain most of all and multiple indicators. If you have multiple confirmations of something doing the same thing, then it's more likely to happen. You have that much more of an edge. And even despite that, despite all that, you're not going to win 100% of the time. Right? It's just not going to happen, right? So let's say, where's Apple? Oh, see, this is me trading Apple today. So let's say realistically, Apple's been in an uptrend for months and months, right? And Apple comes down here. This is a very significant area prior to this level, yeah? Right here. Price does come down. Let's even throw the RSI on there. I'm almost positive that the RSI is going to show oversold here. Don't quote me if I'm wrong, but I'm almost positive. The RSI is super low there. Right there, we're in 40-ish. 40-ish, that was recently. I would have taken this trade so fast. I'm pretty sure I did take a trade here super fast. And you would have lost. But you would have stopped out right here. You wouldn't have lost no money. And then when you come down and you got your retest of that same area, which you did, meet your rules the other direction. Breaks down. You would have gotten all of that short. And then if you had this area here marked, you could have went back long when you got the retest of that. And I mean, it's just, none of this stuff works all the time. But as long as it works more than half the time, or even it only really has to work half the time or less than half the time if you have good risk to reward ratios. MACD works too. My problem with the MACD with this specific strategy is this is mainly all price action, yeah? So with this specific strategy, the MACD will give you late signals most of the time. I like the MACD, but I actually leave the MACD on my charts 99% of the time. But with this specific strategy, this will give you late signals. MACD is a very good indicator of momentum, especially this histogram part. It's a very, very good indicator of momentum. I'm just going to draw some stuff real quick. See here. That actually, MACD gives you a perfect signal there. But most of the time, you get a late signal. Geez, Boeing's making me a liar. Oh, here we go. Let's do this. So if you were looking to short off of this, let's say there, you don't know any of that craziness is going to happen. You got this marked, and let's say you mark this gap because that's a very significant gap, and then you got this high, and then it comes up here and hits it again. The MACD gives you, actually gives, damn it, MACD's making me a liar. See, the MACD works too. Just a lot of times the MACD will give you bad signals. Damn, MACD even catches that reversal. All right, MACD works. No, seriously though, it's important to use more than one indicator. Like, use your eyes first, most importantly. These indicators are not they're not prediction tools. They are added confirmations of something that you already have bias to. Right? So if your eyes are telling you prices at a strong support, the candles are telling you prices at a strong support here, RSI is telling you prices at a strong support, MACD's crossing up too, go long because you're about to hit a home run. But if you don't, always remember, manage your risk. Stops below market structure. And when I say manage your risk, make sure your stop losses aren't in silly, dumb places. If you get in a trade and you're trying to get in it, let's say just for posterity's sake, you want to get into a trade long on Boeing right here. Because for some reason, you're not going to follow any of the rules that you've set for yourself, and you're going long Boeing because you just got a feeling that Boeing's going to the moon. You're going to need to set your stops all the way under recent structure lows for them to make any difference whatsoever. Because you don't want one crazy wick to come stop you out for no reason at all, and then Boeing to go on moon mission without you. Because at this particular time, you didn't have any structure lows except this. If you would have went long here instead, that's good. I could get behind that. 2-to-1. Correct? Ish, 2-to-1-ish. Stops can go below lows without being 14,000 times the size of your profit target. That's good. All right, what else we got? I just use RSI 14. Indicators. RSI 14. It's just the default RSI.
Tell you what, look at the MACD on that dip, the hard dip. You can see where the MACD's late.
Yeah, there we go.
Is
Elber
already back up.
spotted it. Elber spotted it. See, the MACD's not always right. Here's your price. You get a MACD cross up. What happens then? Price tanks. But if you just hold that, right? If you had decided to get in on this MACD cross and you had followed the rules of putting your stops below structure lows, you would have still won money, just not as much money based off strictly off of the MACD. But you would have so your stops would have still been down here below these recent lows, and you would have actually ended up making money here on price. But the MACD's late, so late. Yeah, my RSI on my chart. Somebody asked me how I had RSI 614 and 24 on my chart. My RSI is literally just the default RSI. And you go to indicators, edit indicators, and then you scroll down and find the RSI. 614.24, right there. Default RSI. Done. Yeah, we can do lesson on. I'm planning actually. I'm gonna stop this video, so that it's not super long. But I do appreciate everybody, and then we can just continue to chit chat about other stuff if you guys want to for a little while.